Today, we have a special halftime show edition of The Morning Bid, featuring Reuters columnist and my old friend Jamie McGeever all the way from Florida.
Mike, great to see you, great to be here, and thanks for having me.
So from wars to trade to energy and AI, we'll look at the biggest stories from the past 6 months and what may lay in store for the next 6. This is Reuters Morning Bid, bringing you unfiltered market news and analysis straight from the Reuters newsroom. I'm Mike Dolan in London.
And I'm Jamie McGeever. It's Tuesday, June the 30th.
So Jamie, welcome. It's great to have you here, all the way from the other side of the pond.
Yep.
Look, let's get straight into it. I'd just love to get your take on what you made of that first half of the year, which is an absolutely extraordinary moment. Certainly in geopolitics, we went from Venezuela to Greenland to the Iran war and beyond, and yet markets doing fine.
I mean, you mentioned Venezuela and Greenland. I think if you ask most investors the main issues of the first 6 months of the year, that would probably barely register. It seems like a lifetime ago. Just in the last 12 months, we've had one of the world's biggest trade shocks in decades to one of the world's biggest energy shocks in decades. And yet here we are. S&P is about 7,500 points, all-time highs. The Dow's at all-time highs. And investors are gunning for 8,000. Several banks and shops are raising their forecast for the end of the year. It's almost as if those shocks didn't happen. This resilience has been truly remarkable. And perhaps we can get into why that is.
Yeah, and I think brings us to the main story. Despite all of that kind of rancorous politics, there was one story in town when it came to investment. And looking at the tallies, as everyone does at these calendar moments in the year, the halfway point, we've had the best quarter for US chip stocks ever, certainly the best one for the stocks index. And we've had the worst month, interestingly, for the Magnificent Seven. That had been the kind of vanguard of the kind of mega caps up to now. The worst month in June on record as well.
On record as well. It just shows you the resilience, and that speaks to the rotation that's gone on in the market. All the $6, $7, $8 trillion of AI spend forecasts that we've all been told about. That was good news about 6 months ago. All of a sudden, it's kind of bad news because investors are thinking it's a big spend, and is it going to generate the returns that they expect? But the bad news for the hyperscalers has turned good news for the chip makers, and those stocks have soared. And so those spending the trillions, the share price is down. Those receiving the trillions, their share prices are up. Net, markets have just continued to glide on higher. And that rotation has also gone on in other parts of the market. Small caps have hit all-time highs. The Dow's at all-time highs. Industrials are bouncing back. So what the market, what investors taketh away from the hyperscalers is putting back elsewhere.
So that brings us obviously to the point that we've had this huge whoosh. And of course, it's not just in the United States. We've seen that all around the world. Basically, chip and tech equipment makers everywhere have been going stratospheric. Certainly South Korea.
None more so than South Korea. I mean, you'll know earlier this year, the Kospi was in a rampant bull market, up 50, 60, 70%. And in 3 days, it flipped, crashed back into a bear market. Now it's back up again. And realized volatility in the Kospi, all-time highs. The highest since the index was launched in the early 80s. And that's been mirrored elsewhere in the tech sector. The volatility is rising, yet so the share prices.
So where do we go in the remainder of the year? I think that's what people really want to focus on. I think everyone's kind of tried to unpack the first 6 months. But what does that second half of the year now look like? I mean, there was a sense over the last couple of weeks, certainly within the chip world and the tech world at large, that we were getting about a profit taking at the very least. Plenty of stories out there that might give rise to that. But it does appear that, we found a level, even though last night, as we come into Tuesday's trading, we did get another whoosh higher in Asia stocks on the final day of the quarter. So what's your sense of what people are saying about the remainder of 26?
Well, just in the last few days, in the last week, as you said, it's the end of the quarter, it's the end of the first half. A lot of the brokerages are putting out their end of year forecasts for the second half of the year. And I have to say, the consensus is pretty bullish. The forecast for the S&P, 8,000, 8,100, 8,200 even. are coming out. So you can see investors consensus still see a good 5 to 10% upside. Whether or not that is driven by the hyperscalers, probably not. It's probably other parts of the market. But the consensus is still bullish, and it's definitely buy the dip mentality. And you're talking about those some of these downdrafts that we've seen. If you're coming off 5% from all-time highs, you're only going back to 1 week lows, 2 week lows, and these are entry opportunities for investors. That's certainly how the market is seeing it.
Yeah, it's interesting when you pull the lens out a little bit from the individual wild individual stock moves. You start to look at the broader economy, and any expectation of recession has now evaporated virtually. And the other thing that's been a key feature of that upgraded investment capex spending that we saw only 3 months ago is that U.S. profit expectations for the S&P 500 overall for 26 profit growth is now running at 25%.
Hence those upgrades.
And that's an extraordinary moment because, before that first quarter earnings season, that was down around 13, 14%. So it was almost a 10-point increase on the aggregate profit growth number. That is truly extraordinary. But I want to get your thoughts on the big kind of political event, given that we've had a fair few of them already this year. We do get midterm elections. Should investors have any real focus on this? Will it matter in any way?
If you think the AI story overrides and supersedes everything, probably not. But historically, as we all know, the midterms do trigger some market volatility. The party in power tends to lose seats, usually quite heavily. And it may be seen, this one, as others, as a referendum, essentially a referendum on the current incumbent, Donald Trump. In the States, there's, like elsewhere, there's an affordability crisis. Gas prices were going through the roof. Of course, it's maybe well-timed from his point of view, but gas prices are coming down, energy prices coming down, affordability is slightly easier, but he's running very low on the polls. His approval rating is below 50, has been for some time. So all the polls suggest, and the polymarket betting, etc., does suggest that the Republicans will lose the House. Quite a high hurdle, I think, for the Senate. I think we need 4 seats to flip. Let's see where we are come September, October. But I think affordability is the main issue in the States. However, we've got job numbers coming up on Thursday, and the labour market, for all the pressure it's been under, all the challenges that the economy's faced, the labour market's holding up quite well.
And I suppose just finally, just to touch on the Fed story, which actually has been one of the big transformations in the first half. We went from expecting another cut in the cycle to now being almost nailed on for a hike by October.
I don't think anything's nailed on now. That's part of the issue, because we've got the economists at Citi going for 3 rate cuts over the next 6 or 7 months. We've got economists at Bank of America going for 3 rate hikes in the next 6 months. And I mean, that's a really, really wide divergence. That would be a wide split of opinion over 12 or 18 months, never mind 6 months. So you tell me what the Wash Fed is going to do in the next 6 months. I don't think anybody knows.
Well, we'll hear from Kevin Warsh himself tomorrow. He's in Portugal at the ECB conference, so maybe he'll give us some indication, or although he's not minded to give guidance on anything.
Well, this is it. He's going down the Greenspan route of minimising communications, and certainly when it comes to comms and guidance, less is more.
Yes.
But less is more, less equals more volatility, I think.
And a final word on just as now that we're on the Fed, on the ruling overnight from the US Supreme Court that Donald Trump can't fire Lisa Cook, at least not until her case is heard. And if she, at that point she was found guilty. Does that make any material impact on the Fed view, or even more broadly for the administration?
I don't think so. Certainly not for the Fed. I think the real sort of the ructions and the market shocks and volatility emanating from the Fed and around the Fed story are probably more to do with Powell when he was under the gun and threatened with being fired. Of course, Powell has stayed on as governor, and he said he would stay on, I think, until the Cook case was cleared up. So in the sense that it has any impact on the Fed, maybe we should look towards what Powell does with his place on the board, as opposed to Cook herself.
For today's recommended read, check out Jamie's daily newsletter, Trading Day, to help you make sense of global markets. The link is in the show notes.
For more on any of today's stories, head to Reuters.com or the Reuters app. Follow us on your favourite podcast player, and if you're on a smart speaker, just ask for the latest market news from Reuters.
We'll be back tomorrow.